Good afternoon and welcome to our live stream Friday lunchtime Q&A. My name's Nick Samios. I'm the Director and Fund Manager here at Hermes Capital. I've got three guests joining me today: Daren Anderson from ERA Legal, Patrick Symons from Hyman's, and Scott Langdon from KordaMentha. I'll just introduce them one at a time now, and then we'll get our live session going. So how are you going, Scott?
G'day, Nick. How are you? Very well, very well. Thanks for having us.
What have you been up to this week? What's been keeping you busy?
I think this week I spent most of the week on the phone. It feels like that there's a lot of change going on. There's obviously a lot of change going on with government decisions, and people are very much in a reactionary phase. They're absorbing what's been thrown at them. And at the moment, there's a lot of conversation about trying to understand what the external environment is, what it means for me. So it's no one's being proactive. It's just sort of we're helping people absorb the changing environment, and that's changing on a daily basis. And that's been the biggest piece of my week, talking to stakeholders, talking to businesses around how do we best absorb what's coming from government and other areas.
A lot of holding hands, I think.
Yeah, and people, one of the things that will be a theme, I think, throughout today's conversation is that we're all very lucky and in a privileged position whereby we deal with challenging environments on a daily basis. We work in crisis and crisis management, and the world is in a crisis at the moment, and we are in a privileged position where we're used to it, and we can help companies, but also friends and family work through their individual crises at the moment. And we are a really important pillar of society to be able to actually help people work through their challenges. And it's a time where people in our industry, our collective industries, really need to step up and do the right thing and help people through this current phase. And I think a lot of hand-holding this week and just bouncing ideas off, like being a sounding board. There's a lot of people who we speak to haven't found themselves in this situation before, and the benefit they get to bounce ideas off, say, Scott, what do you think of this? Or I've got an idea. How do you think we execute that? That's been my week.
Next, I'll introduce Patrick Symons from Hyman's. How are you going, Patrick?
Good, thanks.
What's been keeping you busy this week?
Yeah, similar to Scott, sort of 80% of the time on the phone, and probably a little bit more time out of the office, about 20% out seeing people and doing valuations as we normally do. We're still running our online auctions, and there was a bit of transition last week in this to move those programs across to online only and to make sure we're complying with the new regulations about social distancing and deliveries and things like that. But yeah, and a few new insolvency jobs in, and still some pre-finance as well. So a very similar blend to what we normally do, surprisingly.
Interesting. Yeah, some new pre-finance as well. I mean, I've been told by finance brokers that they're certainly settling deals that were in the pipeline, a couple of weeks ago, and there is some new stuff coming through. Must be interesting going on site with all of this social distancing.
Yeah, we have had to bring in some new precautions to keep, number one, the staff safe, but also people that we're meeting on site. So we do have a new process that we're releasing to anyone, as I'm sure a lot of our other valuers out there are doing, to make sure that we are ticking all those boxes. I guess for us, it's about still being able to having the freedom of movement around, but also being able to do what we need to do to give a report to clients that need that professional information.
Introducing our fourth panellist, Daren Anderson from ERA Legal. G'day, Daren.
Good afternoon, Nick.
What's been keeping you busy?
This week, mainly keeping the staff engaged, making sure the staff working from home have plenty to do, keeping in contact with them, making sure that they're adjusting okay. And on the client front, answering clients' questions about a lot of the misinformation and perhaps half information that is out there. There's a lot of confusing information out there, and there's a lot of wrong information.
Right.
People think there's been a lot of legislation passed. The fact is, most of the legislation that has been indicated has not yet been passed. For example, the new rules in relation to the 6-month inability to terminate residential and retail leases isn't actually in place yet.
Right.
They passed some legislation, but the minutiae of that legislation is not in place yet. It will come, but we're looking for it daily. But a lot of things that have been announced. Sorry.
Is that the biggest misconception? I mean, that's interesting. What are the other sort of big misconceptions legally?
Just exactly what has been put in place. Yeah, because there's been a lot of announcements. So this is the government are announcing a lot of changes, but a lot of those changes haven't actually been made yet.
Right.
Essentially, what the government's done is they've passed omnibus legislation, which essentially gives the relevant minister or department head the ability to pass legislation by simply gazetting it in the government gazette, which is quite extraordinary. They're extraordinary powers in the hands of ministers now that they've never held before.
So what I'd like to do is go round to us all and just ask what's the most common questions that people are asking you? Maybe starting with you, Scott. What are the questions that you faced the most this week?
Yeah, thanks, Nick. The number one question I've been asked this week is how do we forecast? How do we do a cash flow forecast in the current environment where there's just a plethora of uncertainties, both external factors and internal factors? And it's a really good question to be asking, and it's the right question to be asking because every business should be looking at their cash flow forecast right now. And some of the advice that we would give broadly around that, or the conversations that I've been having, is that, and people who have worked with me before will have heard this phrase, but we've got to eat the elephant one bite at a time. If you try and eat the elephant all at once, you're going to get indigestion. And it's a big task trying to forecast with so much uncertainty out there. So it's about isolating each risk and putting thought around each risk and each element, and then determining what the controllables are of it and the uncontrollables of it. And this will come to a concept we'll talk about probably a bit later on. But people who are in charge of businesses at the moment need to be incredibly time savvy and spend their time doing high value activities, not just being busy for the sake of being busy. Where am I spending my time that's going to help me position my business not only to survive and thrive? So putting into controllables and uncontrollables is a really important discipline straight off the bat when you're thinking about your cash flow forecast. The second point I would make is that you've got to get a baseline cash flow forecast and determine what that looks like. And the baseline cash flow forecast should be your worst case possible. And once you've got your worst case, we then sensitize each of the controllable and uncontrollable risks, and then have maybe 3 different sensitized cash flows that look over the next 13 weeks, which is really important.
That's interesting.
Yep.
Yeah, I mean, yeah, that's interesting. Controllables and uncontrollables, and a baseline cash flow. I mean, look, it's a bit like how long's a piece of string. Nobody really knows how long this is going to go for. But you think that 13 weeks is a starting point?
Yeah, none of us know how long it is, but 13 weeks is a time frame that I would be spending my time looking at, because you can pull and push things within that 13 weeks. But within that 13 weeks, one of the keys that I'd be telling anybody who would listen is that whatever you think it's going to be today, it's important to accept it's going to change in a week's time and not get frustrated by it. So your cash flow is an active management tool that every day you wake up, it's the first thing you should look at in the morning. You should tweak, what do I need to change, and then replan it out, because it's nothing wrong with getting it wrong, because you're probably going to get it wrong. It's accepting it's going to change, but actively and proactively working your cash flow on a daily basis is absolutely critical. And once you have that sort of baseline cash flow, what should happen is that when you engage with your external stakeholders, you should be able to engage with a lot more clarity and a lot more confidence. And when you engage with your stakeholders with clarity and confidence, you're more likely to be able to get what you want or be able to influence an outcome. So I think the cash flow forecast makes you think deeply about your controllables and uncontrollables, proactively work it, and then you can externally engage with a lot more clarity.
Okay, interesting. And I guess if someone's presenting you with a cash flow, because obviously you know one of your roles is to be engaged by banks and to review cash flows. And if the bank is asking you to look at a client and they throw a cash flow on the table for you to look at in these times, I mean, what are some of the first places that you go to look for reliability of that cash flow?
Obviously, the architecture of the cash flow is really important. The stronger the architecture, the easier the review is. So spending time getting the strong architecture in place around a cash flow is importantly critical. And so thought goes into what the inputs are. The second point I'd make is, especially in the current environment, I'd be spending a lot of time looking at your debtors. Now, debtors are uncontrollable in the current environment. And as you're nodding away, Nick, and I would spend a lot of time focusing on each of the debtors. What are their payment terms? Are there risks associated? What are my leverage points? Because before I get money, I need money in before I can pay money out. And I'd be spending a lot of time understanding the detailed documentation. You picked up on it in one of your earlier calls, making sure that we've got the right invoicing. I'd make sure my inflows are as strong and understood and as well understood as possible, and there is a clear plan behind it. And that's the 80-20 rule. Spend time where it really, really matters.
Patrick, what are the questions you're getting asked the most this week? I've got a good one for you when you tell me.
Well, you've got another one for me. Probably the most common one is, are you still selling assets? So I don't think the question's as much, are auctions still occurring? It's more, are assets actually selling when they're offered? And that's a question right from funders that have maybe some clients that are shaking a little bit, or people that have stock that they're already trying to sell, and stuff that we're holding. But yeah, we're seeing things are moving okay. Obviously, there's some areas that came to a grinding halt, such as catering, hospitality, assets that go in licensed venue. That's probably no surprise. But yeah, we're seeing a lot of businesses being smart about branching out. We've got a printing company that came to us and bought some bottling equipment. They're going to start doing some hand sanitizer type packaging and sales, which I think is pretty smart, and also some labeling stuff that's going to businesses that wouldn't normally. As people being inventive, people coming up with new ways to change what they're doing to suit the market. And also transportation is also pretty strong. We're seeing a lot of businesses that move stock and move goods ramping up, particularly for trucks and for refrigerated trailers. We're seeing sales for late model stuff stay pretty strong.
Right.
But I don't think the trends have changed too much from the end of last year. The government's still pushing pretty hard to get those construction sites and mining unaffected. So sales are reflecting that.
Okay. I mean, one question I've got is, how do you value an asset in this environment? How do you know people are turning up? Well, proverbially turning up to buy stuff. So I guess you're still getting sales figures. If I ask you to value a Kenworth prime mover, what's the basis for that in this market?
Yeah, I think we're tightening up some of the normal factors that we look at. Normally we would look at a truck that was under 10 years old might be pretty strong, whereas now we're dragging that down to sort of more around the 5.
Daren, over to you. What are you getting asked the most this week?
From my commercial clients, what are the banks going to do when all this is over? So the clients the sophisticated clients are saying, well, it's all good the banks are giving us a payment holiday, but it's only a payment holiday. It's not a payment forgiveness. So at the end of this crisis, whenever it ends, the bank's going to want their money back. They're going to want the interest that has accrued during the 6-month period back as well. And the primary concern by a number of the commercial clients who hold substantial real property assets is the banks are going to revalue the assets at the end of the crisis. So asset values are going to come down. So what's the bank's attitude going to be then? Now, my advice to them is very simple. If your business was strong, if you had an underlying strong business before this crisis, then the banks will work with you and you'll survive. You'll come out of it. It'll be a struggle, might take a couple of years, but the banks are not going to, in my view, are not going to shut down businesses that were strong prior to this crisis, but have suffered through no fault of their own through the crisis. On the other hand, if you had a business which was struggling, you probably won't survive it when we come out. You might get a payment holiday.
Yeah.
You might have 6 months not to have to worry about insolvent trading, but you won't survive the crisis. So if you are one of those businesses that was struggling before the crisis, now's the time to start planning about what you're going to do in terms of restructuring your business when you come out. You don't need to make an appointment today or tomorrow, but there's no rush. But you're going to, and now is the time to start thinking about it.
I mean, the insolvency process is a little bit in abeyance at the moment, I suppose, with statute demand notice and kick down the road. And
this might upset some of my insolvency practitioner clients, but I think the federal government has legislated a 6-month holding docker for all businesses already.
Yeah.
So the government has said to all corporations and, in fact, sole traders, whilst this crisis is on, you don't need to worry about insolvent trading, because unless your insolvent trading has a criminal element or is, to use the government's term, egregious. Now, I'd like to see someone prove egregious in court. Then you can't be prosecuted for insolvent trading during this crisis. They've increased the time for compliance with the statutory demand from 3 weeks to 6 months. Same for bankruptcy notices. So essentially, the government's put in a safe harbour protection for the next 6 months.
The thing is, though, if you're out of money, you're out of money. But look, I mean, any comments to that, Scott? I mean,
I'll pick up. Daren's comment is that just because you're not going to get in trouble for insolvent trading, we can't forget the fact that you still are insolvent. And I think if you look at the results on the ASX for December 31 last year, the results was broadly worse, or the worst since we've had the GFC. So there is a lot of stress in the industry before we had this crisis come through, and delineating between it not being illegal to trade whilst insolvent, but the fact is you're still insolvent. I think that what will play through, and what I think should play through, is that if there are zombie companies or companies that are highly stressed prior to the crisis, this 6 months window is a really good time for an elegant dismount and an unwind, which looks after people's interests, because you still have creditors and they still have, and you still have other stakeholders to look after. So this concept of an elegant dismount during this next 6 months for companies that were already financially stressed, I think there's a social good about it, because you do have you're looking after other people's money.
And I agree with that 100%, Scott. This is a time for those companies who had businesses that were struggling prior to the crisis to have the time and think through and work out a plan how to best restructure or shut down their company with the least amount of pain possible. And they should start thinking about it now. You don't have to do it next week, but this is a once-in-a-lifetime opportunity to use Scott's phrase, to have an elegant dismount.
It's interesting because I want to go to some newspaper headlines that I've got here to talk about. I'm seeing a lot of moral hazard. There's, for example, look, let's go to it, and then we'll talk about the elegant dismount and the moral hazard as we get there. And so the first headline I've got here is: government shouldn't rescue airlines or super funds from their own ineptitude. So without wanting to sort of name names, I mean, I think the issue is, should the government be bailing out businesses? Should the government be bailing out businesses that were maybe doomed to fail in the first place, or should they instead be encouraging them to elegantly dismount?
Nick, can we add football clubs to that headline? The NRL, for argument's sake.
Well, I'd rather maybe talk about rugby, but we're going to start getting into religion now. We shouldn't discuss religion or politics. If you've got two businesses competing head to head, I remember years ago I had two transport businesses. It was very specialised. I don't want to say what the area of transport was because I don't want to identify them. But, one of them I financed, and we, through our funding, we paid their tax and all the rest of it. The other one went through a voluntary administration process and, basically reduced all of their tax debt to 10 cents on the dollar. There is that kind of moral hazard, do you think?
I think that we'll see, probably slightly angling differently, is that we will see a lot of companies enter into voluntary administration through this next, I think, post 30 June period as a way of reconstructing their business. And if we go back to the early 90s when the voluntary administration process was first adopted in the Corps Act, it's all about rehabilitation and coming out the other side. And I think that government is in a really challenging position and support, but I think that people will use, to your transport example, the voluntary administration process to tighten up their business, straighten it up a little bit, and hopefully come out a rehabilitated and a company that can sustain for the longer term.
Okay. Now, my next headline here is economy won't take flight, shackled to zombies. So it's on a related topic, I suppose. I mean, what do things look like in six? Say we're well and truly in 6 months' time. The payment holidays are over. The courts start filling up with statutory demand legal action. What does that look like with the healthy companies and the companies that are maybe all of a sudden their legacy issues start coming home to roost?
One thing that has been surprising and quite pleasing is everyone's attitude to this crisis. People are just sitting back and waiting, and everybody's working with each other. I think when we come out of the crisis, the same thing has to happen for the next 6 or 12 months. Everyone has to have an understanding that everybody's going to be strapped for cash, no matter how good their business is. So time will tell whether we turn into a society where as soon as we're allowed out of our houses, it's going to be every man for themselves, or people are going to look at things practically and reasonably and understand it's going to take some time to get paid, and we've got to continue to work together. Now, which way it will go, I don't know. But I hope it's the working together approach and everyone understanding. But if it's not, well, then it will be a field day for lawyers and for insolvency practitioners. So
I think, Daren, I think that's the probabilities of that happening will be heavily dependent on if people control their own destiny and are proactive about it. I think one of my earlier comments was everyone's absorbing what's happening. There's a crisis, there's government assistance, and we're in an absorb phase. But people who had walls of debt before this crisis comes still need to deal with that wall of debt. And you need to control your environment. And I think people will, post this phase, if you control your stakeholders, you treat them with the respect, you take them on a journey, you can walk in their shoes and so they can walk in your shoes, the probabilities of having a collaborative business environment, in 6 months' time are far greater than trying to be reactive and saying, what about me? I think people who, after you get through this short phase of absorbing, you then got to get on the front foot and try and control your environment.
And I think one thing everybody needs to understand, and nobody's talking about, is that this benevolence by the banks and by the government, which I have found extraordinary, the amount of concessions and the money that the government is pumping in the economy, it cannot last. So it's going to stop. So prepare for when it stops.
One of my concerns is we've got benevolence from the government, we've got benevolence from the banks. I had a client this morning was basically forced to give a 50 cents in the dollar credit to one of their customers who was a large company who was saying, because of Corona, we can only pay you 50%. I think small businesses really need to stick together and pay each other. We'll move along to the next one because we could talk a lot about these. Now, this is one that I'm really interested to hear from Scott on this one. drawing the line in the sand on banker benevolence. This was an article in the Fin Review a couple of days ago. And Scott, you're closer to it than I am, is that if you're in asset management BC before Corona, no special favours, now. The banks are focused on trying to help people that are in trouble because of Corona. What are you hearing out of the bad banks?
I think that there was an article in the paper earlier in the week that said that NAB had more inquiries in 5 days than they had from this is individual loan than they have in 12 months. So the inflow is overwhelming for them to manage at the moment, and I think that them, like all of us, are working on it on a staged basis. And at the moment, I think they're just trying to make sure that they can do what they can to help the borrower through this.
If you're on the brink of a deal that may have involved a little bit of a haircut, say 4 weeks ago, to me, the bank seems to have pushed that file to the side of their table. Is that just a one-off, or is that the way they're? Are they still working out their workouts? Or
I don't think they would. I wouldn't think that. I think that would be a one-off. They would still like to. The plans they put in place and the processes they have in place, I think they will still execute on. Absolutely, I don't think that changes. But it might be when they had this many files to deal with previously, it's now this many, and it might just take longer to process. But no, I believe that my take is, and I've got a few files in similar positions, that the banks will absolutely stay the course on any deals done pre-Corona.
On our side, we have seen one of the big banks has completely put a hold on any asset repossessions.
Right.
So unless you call the bank and say, I won't name the bank, I want to return my car because I've lost my job and I can't pay the lease, and I think that's the kicking the can down the road attitude. They're trying to put a stop to it. They can return the car, but at least one of the big banks is no longer actively chasing any repossessions for asset finance contracts. And I think that will filter through to some of the other big banks where they're trying to be the good guys in this situation as much as possible.
Can I just add to that? My understanding is that the New South Wales Sheriff's Office, which does all of the residential and commercial evictions, once an order for possession is obtained, has stopped scheduling evictions.
I want to draw you in here, Patrick. I know that you're an equipment guy, but I know that these days virtually you sit next to your commercial property guys. There's this one here, why bankers are sweating over the commercial property loan books. And then I've also got this one here, house sales will collapse, says UBS as it rips up its forecasts. What's the chatter in the office there at Hyman's about property and where it's headed?
Yeah, well, the virtual chatter is that it's in New South Wales, particularly the funders that we act for, it seems to be pretty business as usual. It is hard to determine if those deals were already coming through the pipeline and are now just being settled, or if they're fresh. But we have been asking the question, and in New South Wales, it does seem they are still, if the idea of the loan still is supported by a tenant or by the client having the legs, and they're still writing those deals, and that's right from banks right through to lower tier lenders. Queensland, we have seen it has definitely slowed, and there is a lot more anti-risk behaviour in Queensland. And Victoria, we've seen it slow down, similar to Queensland. So I don't know whether that's just our client base that we service from a property valuation point of view, but our valuers are saying they haven't seen any particular slow in New South Wales, whereas Queensland and Victoria are definitely on sort of a simmer setting.
What about in the West? I mean, I know, Scott, maybe you've got the contribution next. I know you've still got your fingers on the pulse over West. I'm certainly hearing good things. The mining sector seems to be holding up in all our mining services clients, etc. What about property in the West? What are you hearing?
I think property in the West is probably similar to nationally. I think everyone's holding their breath at the moment, uncertain. The reports are so wide ranging, from a 5% fall in property prices. I'm talking residential to some people are reporting 20 or so. I think that there is so much uncertainty at the moment that everyone's holding their breath in the property space to see how it's going to play out. But we don't think there's going to be there's not going to be a lot of transactions over the short term. So therefore, we would think that we really need to break the sort of the next 3 months to see what's actually going to happen with the property. We don't think property prices are going to alter too much over the next short period of time, simply because there's not going to be a lot of activity. And it's very much a holding pattern is the KordaMentha view at the moment.
My final slide here is just to wrap up on this one is Robert Godliebson here. Coronavirus, 6 months is too long for a small business to survive.
6 months does sound like a long time. It's a whole football season, and as a reference point, it is an absolute long time. I don't think it's a reference point that the government put out there very early on, and obviously all their policies around it. My advice to small business in particular would be, just because that's what the government's putting out there as their reference point, doesn't mean that's what you need to do. Goes back to what I said at the beginning. Have a cash flow, look at it every day, and look at what you can adapt on a daily basis. Don't be thinking in 6 months' time, I'm going to be in a new world. It's not going to happen. I think 6 months is a long, long time, and I'd be constantly looking to refine my business on how I can adapt, pivot, and work my cash flow, think about my customers. It's a daily basis, eating the elephant one bite at a time.
What do you think, Daren? I mean, how long do you think people can hang on for?
I think it goes back to my earlier point. If you've got a terminal illness and they put you in a cryogenic chamber for 6 months, when they take you out of the cryogenic chamber, you've still got the terminal illness.
Right.
Just got time to try and work out how to deal with it during that period. Strong business, strong going in, can last 6 months. If you had a lot of legacy debt and a lot of issues before you went into this, then start thinking about how you're going to restructure your business or close it down and start something new during this period, because you will never have this opportunity again.
To elegantly dismount is
to elegantly dismount. I think that's going to be the new term, industry term. Scott, you've coined a new phrase today for everyone: the elegant dismount.
And Patrick.
Yeah, I think what Daren said earlier, it's going to heavily depend on if the current attitude of everybody helping each other right through all aspects is going to carry on in that when the 90-day lift happens, or in the 6 months when we come out of it. Talking to a lot of commercial landlords of new insolvency jobs who've been looking at their attitude, and even some landlords that we've dealt with before that would normally be quite aggressive. It's amazing how open they are to really doing whatever they can, because I think they see that if they don't, everyone in the chain doesn't play ball, then there's going to be no one at the other end, and that's a problem for them as well. So that's the term I've been hearing, is that kicking the can down the road and then trying to figure out what that means at the end of the rainbow.
Yeah.
There's definitely an attitude change at the moment, but whether that'll still be there in 6 months when it's game on, it will really depend.
Well, the thing is, you're still clearing assets. People are still buying stuff, and the prices are still holding up. I mean, are you just sort of crossing your fingers every morning, or you're confident that this is the interesting thing, I suppose. Where you're thinking, in 6 months' time, if this drags on, surely the prices won't hold up.
There's going to be a point, where we have to basically make decisions based on the information that's available now. They're saying, the current social distancing restrictions will be lifted in 90 days, and movement, only Queensland has their border closed, so we can only judge off what we think is going to happen and try and factor in the trends. But if it's still as it is right now in 6 months, I think asset prices there's no choice but for it to be really impacted.
Thank you very much to everyone for joining me. Thanks a lot, Scott. Really appreciate you joining in. Daren,
thanks for the opportunity.
And Patrick, I think that we've hopefully you think that we've found a good format for a Friday afternoon lunchtime, and hopefully we'll be able to do this again. So thanks a lot, guys. Thank you very much, and we look forward to speaking to everyone again soon. Cheers.
Cheers.
Thanks, guys.